Welcome back, everyone. Next up, we have Renforth Resources, Inc., which trades on the OTCQB under the symbol RFHRF and on the CSE under the symbol RFR, and is a secure multi-commodity area play with the dominant brownfield land position south of the world-class Cadillac-Larder Lake Fault in the prolific Cadillac and Malartic mining camps of Quebec's Abitibi, offering exposure to gold, zinc, nickel, copper, cobalt, and more, including lithium. Renforth's land position encompasses several areas of interest. It's a pleasure to bring back President and CEO Nicole Brewster. Welcome, Nicole.
Hey there. Thanks for joining me, everybody. So it gives me pleasure to walk you through Renforth Resources, the company which I run. We do trade on the CSE and the OTCQB, as you see on our front page here. Front page actually depicts surface mineralization in Quebec, which we're very excited about. It's critical and strategic minerals, namely zinc, nickel, copper, cobalt, all the things we need for the energy transition. So we're excited to have this large land position amongst other assets, and we're going to dive right in and talk about them. Now, as you heard, I'm the president and CEO of the company. Therefore, anything I say, I'm not impartial. It's my job. It's my job to talk about Renforth. So if you have any questions, reach out to me. Nicole at renforthresources.com is my email. Ask your own advisors, do your own due diligence. You should always do your own due diligence in any business, really. So who or what is Renforth? Well, we're a publicly traded. That means we trade on 3 stock exchanges, actually. The OTCQB in the United States, the symbol is RFHRF. The CSE in Canada, Toronto, the symbol is RFR. And we actually trade on the Frankfurt Exchange. 99R is the ticker there. So we're publicly traded. We're owned by our shareholders. And why do people own shares in a publicly traded junior exploration company? Well, I can't give you financial advice. However, the answer is obvious. You own the shares because you're speculating. You are speculating that the value of the shares will go up based upon the underlying assets. So our strategy is to be well positioned with numerous underlying assets of technical merit. They contain metal and minerals which the market needs, wants, we will need for our energy transition that we're currently living through. And we hope to one day be able to either sell the properties at a profit or develop the properties into mines. The value cycle starts with us. We're starting with empty fields, literally. So it is an interesting opportunity for people who want to be in the market. Excuse my cell phone if you heard that. Now, where are we? We're in Ontario. We're in Quebec. We have critical and strategic metals. We have gold backing those critical and strategic metals. The critical and strategic metals we're talking about are copper, zinc, nickel, cobalt, and lithium. In Quebec, we have a significant advantage. We're in the near north. We're in the southern portion of Quebec. We have road access. We're near towns where there are established mines. Our mineralization is at surface, and our mineralization is of a large scale at Ceremo. We're talking about one trend that's more than 20 kilometers long. So all of these things affect the green profile of our nickel. Our nickel is already, it can capture carbon. That's a scientific phenomenon, but it will be close to where these metals are needed. These metals will be needed through Quebec, Ontario, and into the eastern seaboard of the United States, where all the battery manufacturing and EVs are concentrated. We have easy routes to those markets. So our logistics allow our people to live at home. We don't use helicopters. We can drive right to the mineralization for both our gold and for the critical minerals. Now, to get this out of the way, we have numerous exploration properties. I believe we have 7 offhand. I could be wrong. I think it's 7 currently publicly announced. We're not even going to talk about those. Those are in our pipeline. They are standing behind the 2 assets we're going to talk about. You see on this page, Ceremo It's a 330 square kilometer. That's about 4 times the size of the island of Manhattan. 330 square kilometer property with road access, with hydroelectric power next door to established and operating mines for gold. But in communities that support mining, everybody works in mining, and all the services and products we need are available. Right close to Ceremo, as you see on this slide, is our Parbec gold deposit. It's gold on surface. It's actually on strike and joined to Canada's largest open pit gold mine. Again, very well positioned. So our logistics are a huge advantage. Lets us work very cost effectively and deliver to market, if we get to that point, very cost effectively. So we're mainly going to talk about Ceremo. I've added Parbec to the end of this presentation to tell you a little bit about our gold and where we're going with it. But the really topical thing is Ceremo. Ceremo encompasses several types of mineralization. This slide shows the base metals and the gold. In blue, historic base metals, specifically across the middle of the property, joined by orange dashed lines, is our Victoria structure. It's 20 kilometers long. It is a mix of nickel, cobalt, ultramafics, interlayered with VMS copper zinc material. It also has gold in it and silver. And we're just starting to learn the true complexion of this mineralization. We've drilled off in total about 3 kilometers of the 20 kilometers, and that drilling's been fairly loose. So we're just at the beginning of telling this story. Also at Ceremo, there is numerous gold occurrences, and we made a copper discovery in the northern part of the property. So Ceremo is quite exciting. It hasn't been worked. It was last worked in the 80s. The Cadillac break is a huge structure, runs from more than hundreds of kilometers, and it's a gold structure. So that's what everybody in the neighborhood paid attention to. The base metals weren't compelling enough, nor was there a particular need for the base metals in the 1980s. Of course, fast forward 40 some odd years, and now we need the copper, zinc, nickel, and the cobalt for the challenge of storing energy. So that's what we will do. We will work to discover the extent of that mineralization on the property. Now, mining, mining's not popular. Mining has to be better. It has to be sustainable. It has to be green, and it has to bring things to market in the best way possible. So Ceremo is well positioned to do all of that. Our logistics impact is very low. We're driving to the property. We can use rail lines, and the power we use is being generated by hydroelectricity. The power lines are already on the property. We don't even have to string power lines to the property. We also are looking at sulfide nickel. Nickel is problematic. It's largely being produced in Indonesia now. It's mostly controlled by the Chinese, but Indonesian nickel comes to the market at a horrible price. It's a lower grade that has to be processed multiple times to reach a battery class of nickel. It's also got huge environmental impacts in Indonesia. So the carbon consumed in Indonesian nickel is significant. As we look to ESG, several automakers are using Indonesian nickel with no problem in the European market, but the North American market and the Inflation Reduction Act of the United States is going to present different challenges. Our ESG criteria and values are higher in North America. The U.S. system wants to see traceability of where commodities come from. We want to ensure good social acceptance and values, not the use of children in the production of cobalt, for example, in Africa. So again, we're very well positioned to do all of that. So our ESG values, which are becoming something mining has to really pay attention to, are off to a good start. Now, we've spoken briefly about lithium. This is the same property. This is Ceremo. We've zoomed in a little bit. And the reason the map's changed is the earlier image back here was looking at the geophysics. with the high dashed orange line across the middle. Now we've moved to the southern portion, the bottom of that image, and we're looking at the geology. And in pink, you see something called a batholith. It's a kind of rock, but it's an important kind of rock if you're looking for lithium. We have numerous pegmatites, which is, again, a kind of rock, all over the Ceremo property. We've visited some. We can see others from satellite photos that we haven't visited. Pegmatites can host many things. You'll see in a couple slides, they host rare elements, but the rare element everyone's really hoping they host is lithium via spodumene. So we have only spent about 10 days in the field prospecting, and the field we deal with is huge, so we've only scratched the surface. But documented historically, and shown in this image, are several MERN, and that's the government of Quebec. They've gone in and they've documented the presence of pegmatites and associated lithium, and we have to follow in their footsteps. We do have lithium on the property. We don't yet know if we have anything that's got commercial value, but we will be very soon back in the field prospecting. We'll be going out to some of the pegmatites we can identify by air, and we will be looking to see if there's any spodumene associated with them or if it's other rare elements that are associated with them. Because there's a whole slew of rare elements we need for the energy transition we're going through. Now, this image shows you the red line is the contact of the sediments in the batholith. That's the high priority area to visit. And we have the largest run of that area in the camp we're in. But it also shows you how little sampling. We've visited those points, but there's a lot we haven't visited. So we still have our work cut out for us. There's still a lot of blue sky here. We have by no means answered the lithium question at Ceremo sufficiently. So we haven't been able to be in the field because we had significant forest fire issues, and we've had to wait for our staff, our contractors, to be available, and we're in that period of availability in the next week. However, we have been looking at our soil survey data, and this soil survey data is very widely spaced, and it shows us some interesting information. We've got anomalies for pegmatites seen in soil survey work done largely by the Quebec government. These are the pegmatite suite, and you can see where we get cesium, thorium, uranium, and lithium kicks in the soil data. That's important, and these become targets, specifically the one down. If you recall, we talked about the edge of the batholith, and you can see the batholith here being prospective. You'll see there's a lithium kick right along the edge of the batholith. We've not sampled that yet. We haven't found that pegmatite. We haven't looked there yet. Now, we continue to move through the other metals we're concerned with at Ceremo as we find our exploration targets. I should back up a step. You see across the middle of the property the same line. It's in red, and it has a cesium anomaly. Well, it's got a pegmatite anomaly associated with it. That's our 20-kilometer Victoria system, and we do know there's lithium in that system. Now, as we move into the ultramafic rocks, which would host our nickel, our cobalt, we can see that we're getting anomalies on Victoria again. So the data we know is correct. We've drilled there, and we've found the same rocks, the same metal. But again, look at the edge of the batholith, and we have an ultramafic anomaly popping its head up. We've never been there again. And there are a few others on the property that have never been visited that are on the list to be visited. The VMS suite, VMS is a different animal. VMS discoveries are few and far between. And if you've heard me talk before, you've heard me say we're chasing the VMS here. We're employing a world-class geologist to do his data work. He's seen a lateral relationship with the VMS. We recently announced the presence of graphitic mudstone in a much more significant occurrence than we previously anticipated. That's an indicator. We're in a VMS environment. We haven't found the VMS yet. We've found a whole bunch of indicators. So again, the soil survey delivers VMS indicators as well. Now, this is interesting. This is gold. And if you think back to the beginning when I started talking, I told you there was gold on this property. We've seen it, we've sampled it. We also know there's very long intervals of low-grade gold drilled historically. But you recall I told you the property next door is Canada's largest open-pit gold mine. And you see the gold anomalies, the yellow circles there. Well, the area of the yellow circles above Victoria in the upper middle portion of our property here, we've never visited those. Those are targets for us, as is the one floating in between Victoria and the batholith margin. That's fully in the Pontiac sediments. We've not explored that either. So these are all exploration targets. And if these deliver, they change the complexion of this project significantly, and they change the value of the project. So suffice to say, this image wraps up all of our soil sample work. We've identified numerous targets on the property, both gold and base metals and lithium targets from the analysis of the soil data. So it was some very important work that we took the lull in the ability to be in the field to do, and it's delivered a bunch of targets, which we will be in the field very shortly following up on. Now, I told you I'd talk about the gold because we have a few minutes left here. I haven't spoken to this audience about gold in quite a while. We've had our Parbec deposit in our back pocket for a bit. I see it as an insurance policy for Renforth shareholders. Parbec does have a mineral resource attached to it. It is a deposit. The mineral resource was calculated in 2020, and we drilled subsequent to the mineral resource, expanding the mineralization seen in that resource with 15,000 meters of drilling. We expanded it down dip. We filled in a couple holes. We still have holes in the model to fill in. The model's open on strike, meaning in either direction laterally. It's also open at depth. It's open below it. The Cadillac break is a very deep-seated structure, and if you see on this image, Canadian Malartic Mine, which is our next-door neighbor, if you keep moving to the east, the Odyssey tag, they discovered that deposit at 700 meters. Our deepest pierce point at Parbec, well, more than 80% of our resource sits above 300 meters. Our deepest pierce point is perhaps 350 meters, 375 meters. We've not even tested how deep this structure, well, the Cadillac break goes, how deep the gold goes that's associated with the Cadillac break. So we've got work to do at Parbec. We haven't integrated our most recent drilling into an updated resource yet, and honestly, we probably will not do so for a little while, and I'm about to tell you the reasons why. I want to assure you that Parbec has high-grade gold in the system, which is unusual because we're next door to Canada's largest open pit, which went to market just scraping a gram per ton. It's a low-grade deposit next door, and we're a high-grade deposit sitting beside it. We also have fairly long intersections of gold, so there is thickness to the structures at Parbec. These are important. Gold at Parbec occurs in 3 locations. The Island Trench Zone in the north, very underexplored. However, we see it on surface, and it is the deepest pierce point on the property. It's actually quite a bit deeper than the Cadillac break, in fact. The Cadillac break is outlined in blue, and that's the main gold zone. We haven't drilled off the entire extent of it, and we haven't drilled off the depth of it, as I just finished telling you. But one thing we did do while we were working, trying to get deeper on the Cadillac break, we backed up away from it to drill a deeper hole, and we discovered the splay of the Cadillac break, which we can see in the regional geophysics, is associated with gold in the sediments. So this is a new discovery, and it's very exciting because when a structure as big as the Cadillac break breaks or bends or moves, it does fun things associated with gold emplacement. The Cadillac break was the fault that allowed fluids to move through and ultimately leave gold behind a long, long time ago. So one of the things we're doing, the Cadillac with the Parbec deposit, this is a schematic. This was generated in 2018. It was an evaluation we were working on prior to the resource, which was calculated. This interpretation is one we're revisiting, where we see flatter, neutral, or shallow angled plunging gold enrichment. We're revisiting this. We're going to layer in our 2020 and 21 drilling, see what this model looks like, and probably use this model to target our next round of work at Parbec, which will be coming. Now, really quickly, because we'll leave a couple minutes for questions. Ernst & Young, top 10 business risks for the mining business. ESG, number one among CEOs for this coming year. Wasn't even on the radar prior to this. As I said, we're very well positioned in this regard. Geopolitics, again, we're in the provinces of Quebec and Ontario in Canada. We are a mining country. We're a resource country. This is a fairly socially acceptable thing to do here. Climate change impacts everyone. It kept us out of the field for a while. Right now, the forest is very dry, but we expect we'll be able to get out and get a bit of work done. Global nickel supply. I spoke about this briefly. I'm not going to go into the macro deeply. Again, email me, Nicole at renforthresources.com. The global nickel supply is extremely problematic in terms of where it is coming from. It's simply not acceptable. And I think you'll see North American industry pivot away from it. Currently, this is from the U.S. Department of Energy. They've ranked the outlook for critical and strategic minerals and the supply risk. This was the supply risk. So right now, if we look at nickel, you will find it in there. Lithium, nickel, they're both important. They're in the third percentile of importance to the energy market in the United States. Supply risk isn't too bad. It's there, but it's not critical. All of the IUM minerals made in, they make rare earth magnets, they're already critical. They're not going to get better. But when we move out past 2025, do you see how the US government's moved lithium and nickel pretty much to the top of the critical list? Uranium's not too far behind. Cobalt fills it in. And of course, the magnet metals are all still there. So we're well positioned, I think, moving forward. We're focused on things that are critical. We're backstopped by a gold deposit, which ensures value in the company and will only increase. We already know we increased it with the work we did in 2020 and 21. So I think to shareholders or people considering becoming shareholders, we present a compelling argument in that we're in a safe jurisdiction. We're in a very good ESG position. We're in the minerals and the metals needed for our evolving future in terms of the energy transition. We're backed by a gold deposit, ensuring integral value in the company. And I mean, we're super cheap. We're a junior stock. The stock is trading at $1.50 today, Canadian. And that is a 52-week low. So it's the dog days of summer. They're upon us, and it's a great time to consider entering the market if you feel so inclined. But again, that's not financial advice. Do your own due diligence. And with that, Anna, any questions?
Great job, Nicole. Yes, as always, we've got questions for you. Let's jump in. Adrian Cantwell asks, do any First Nations have interest in or claims on any part of Ceremo?
Good question, Adrian. We're actually in a phenomenal First Nation position, and it's a little bit convoluted, but I want to give you the story. The province of Quebec is unceded. There was no treaty over the entirety of the province of Quebec. However, halfway down Ceremo, pretty much in line with the road that goes vertically down the center of the property, and to the west, which is also where we happen to be working, a treaty which was struck in 1907, I believe, in Ontario, with the Algonquin Nation, it applies because it was struck around Lake Algonquin. So we're at the very southern extent of the traditional lands of the Picogan community. The community itself is about an hour north of us. However, they have the outright rights to the western portion of the property. We're on good terms with them. They don't have any material rights. It's their traditional lands, but it simplifies our situation because it means we're only dealing with one First Nation. So we hire Picogan for the services they can deliver when we need those services. So we're on great terms. Right now, As Ceremo probably in the future, and this is a forward-looking statement, moves towards a mining scenario, there will have to be an impact benefit agreement negotiated. However, Pikagan is already party to one with a deposit that's nearby Amos, so I don't anticipate that in itself being problematic.
Thank you for that answer. She also has 2 follow-up questions. When might the next drill program begin?
We're going to do our prospecting right now because we're moving into our peak time for prospecting. The bugs are largely dead despite how wet it's been here. It's dry in the north, and the leaves will start falling. I would anticipate we'd be looking to drill probably November, December after we digest findings from our upcoming prospecting. So towards the end of the year is the answer, Adrian.
And can you talk about some catalysts that might move the share price over the next 6 to 12 months?
Oh, results. I mean, there's malaise in the market. There's macro issues around everything right now, as we're aware. We're also headed into what is meant to be the most optimistic quarter in the United States, being the 4th quarter of the 3rd year of any president. I think we'll see the market turn towards the fall. This is the typically August is brutal, and frequently I would take vacation at this time of year because of that. But results, it's all results driven. We'll deliver results. I have no doubt of that whatsoever. And I think those will actually impact the market.
Ron Jones wants to know if you're marketing Parbec.
Not aggressively, Ron. There's actually somebody in a data room right now, but that's not the first time we've had people in the data room. They just don't come up with options that excite me. Parbec has a great deal of intrinsic value, and it has potential that we see based on our interpretation. And if someone can come up with the right price, then the marketing changes its tune. I could be surprised by the guys in there right now, but I'm not anticipating that.
Scott Murillo wants to know, what is your ownership and control structure in the land position?
Well, I'm a shareholder of Renforth, so I don't own any of the land. So I participate as a shareholder. I was buying stock yesterday. My ownership position, well, it's going to be probably around 12 million shares directly and probably another, I don't even know, 5 or so million indirect. No, well, in total, it's another 10 million share position indirectly. In terms of the percentage of the company that I own in that regard, I can't even tell you off the top of my head, but if I have to give you a number, I'll tell you 3%. What I can tell you is it's everything. It's my total net worth is tied up in the company. So, you know, I participate and benefit like shareholders do. I get paid shares. I don't take any money out of the company, nor does the CFO. So once a year, we get paid shares, which we value at 5 cents, or the share price, whichever is higher. So yeah, I'm positioned like a shareholder.
And Jay wants you to clarify what exactly is Renforth's role in these properties. He heard you on the last conference, and he wants to understand, is it more consulting and less exploration? Can you clarify for Jay?
No, well, Renforth is a junior exploration company, and we hold the mineral rights to all of these properties, with one exception, a gold property in Ontario. We hold the surface rights because we have patents, but we are the owner of the mining rights. They're subsurface rights. So we are the exploration company. We hire contractors in that we don't have any employees. I run this company incredibly tightly to keep our burn rate, our monthly sustainability costs down. We don't have employees. We hire contractors to carry out exploration programs for us, and then we evaluate the results. So our position is owner of the properties, to put it simplistically.
And Al asks or says, historically, what studies have been complete and what's coming up that they can look out for?
Well, what studies have been completed? The most recent study at Parbec was a 43101 mineral resource estimate in May of 2020, which identifies a resource which totals 281,000 ounces, 104,000 are at a grade of 1.78, and they're indicated. 177,000 are at 1.77 grams per ton gold, and they're inferred. And then after that, we drilled another 15,000 meters, expanding the mineralization, but we have not yet calculated a resource, and I don't think you'll see one in the short term at Parbec. In terms of reports at Ceremo, we file work reports to keep the claims in good standing. Those can be found through SIGOM. I really don't know how to pronounce that. It's the French government's repository of geological information. Those are campaign-specific reports, so they're drill reports and such. There's been no resource calculated on any part of Ceremo yet, and I don't know. We've found people that can write that for us, but we have more work to do before we calculate that resource. So that's probably a late next year kind of thing, after some more drilling and prospecting.
And Darian Craig says, sulfite nickel, what is going to be your labor costs to produce when you get there versus the Chinese or other countries with very low labor costs? Are you able to compete?
Well, it's Indonesia. It's not China that's producing the nickel. Can we compete on a labor cost? I have no idea. We're looking at a surface situation where we would conceptually, if a decision is made to mine, be mining via open pit. And we would probably be, I don't know how we'd be processing. There are some options, but that's got the cart way before the horse. So in general, can North America compete with labor costs when people are arguably working slaves in third world countries? No, we can't compete. Is it going to matter? Probably not, because U.S. Inflation Act, in order to be eligible for tax advantages, grants, loans from the U.S. government, and savings for the consumer, EV producers in the United States are going to have traceability that does not involve China. So it is an opportunity for North American industry, North American mining, trading partners of the United States, of which Canada is one, to be involved in the system. But because we'll be producing it nearby, and we'll be producing it to North American standards. So they're two totally separate animals, is my answer. And furthermore, this is all forward looking, because we're not mining yet. We're still exploring. We're still determining how much metal is there.
And last question from Rob, seems like a great opportunity to end as well. What is the milestone that Renforth would achieve that could consider it de-risked? Talk about, is it more exploration, more mining projects? Give us a little future outlook.
Well, we're talking about de-risking a stock that's trading at $0.015 right now. We have in situ gold, which does that job, honestly. Ceremo will be de-risked once there's a resource statement in place. However, there's evident surface mineralization, so the risk is arguably removed as well. There's not a question of is it mineralized or not. The other 7 properties that stand behind those ones, they're all blue sky. So de-risking is a gradual process in terms of exploration. You have to find your own personal comfort level. Do you believe the CEO? Do you understand what I'm talking about? Do you see the value in the metals or the minerals which the company has ownership of in the ground? Do you think they could be conceivably mined one day? Do you think we could find enough to mine them one day? De-risking is a personal question. For me, I'm not well positioned to answer it because I don't perceive the risk here. I see the possibility and the potential. Happy to have a discussion one-on-one in terms of where your own personal, risk triggers lie and have we satisfied them or not. Again, Nicole at renforthresources.com. And apologies, I'm not trying to be facile. It's truly a question I can't answer. So, sorry.
Wonderful. Well, you do a great presentation every time, Nicole. Thank you so much for being back on our conference.
Thanks for having me. I appreciate everyone's time. Have a good day. Enjoy August, everyone.
Thank you. Okay, everyone, stay with us. We'll be back at 2:40 Eastern with Clear One, which trades on the NASDAQ. We'll be right back.